Hey everyone, welcome back to Corporate Decoder, the place where we decode the most important financial documents so you don't have to. So imagine this, it is a new year, everyone is feeling optimistic. But then bam, unexpected charges and a whole lot of accounting jargon. We are diving into Envista Holdings Corporation's 2025 annual report, and let me tell you, it is a ride. And before we jump into the nitty gritty, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we break down these filings even further. Alright, let's get straight to the numbers. Envista, as of the end of 2025, had over $56 billion in assets. That sounds like a lot. And it is, but what is interesting is how that breaks down. They ended 2025 with roughly $567.9 billion in total assets, which is up from around $350 billion in 2024. That growth is good, but not as exciting as some of the other numbers we will see later. Now, this part always catches my eye, goodwill. That big number, $235.8 billion in 2025 alone. That is a significant chunk of their assets. It represents the extra value they paid for companies they acquired over the years. But it also means they are very reliant on those past deals performing well. Let us look at how they did operationally. Revenue in 2025 jumped to $271.9 billion. This is an 8.3% increase from 2024. That sounds pretty decent, especially considering the global economic backdrop they talk about. Now look at their cost of sales, that also went up by 8.3%. It basically means their costs to make their products grew at the same rate as their sales. This is like everything staying the same, no improvement in efficiency, but also no major red flags, just steady business. And because their costs grew with their sales, their gross profit stayed at a healthy 54.7%. A consistent margin is usually a good sign of stability. Here is where things get a little more interesting. They're selling general and administrative expenses, that is their spending on things like marketing, salaries, and office costs, actually went down slightly as a percentage of sales from 46.1% in 2024 to 42.5% in 2025. This is a really good sign. It suggests they are becoming more efficient in how they run the business and market their product. But notice their research and development spending, that went up about 15%. It tells us they are investing more in new products and innovation, a crucial move in this competitive industry. Now for the big one, the truly eye-opening number. In 2024, they had a massive goodwill and intangible asset impairment charge of over $1.1 billion that almost wiped out any profit for that year. Imagine realizing that a big chunk of what you thought your company was worth was suddenly gone. This was a huge shocker for them and for investors. But get this, in 2025, after all that pain, they recorded $0 in goodwill impairment. Charges that is a huge turnaround and implies they have either fixed the underlying issues that caused the impairment, or the market has recovered enough that their assets are now considered valuable. Again, this would likely be a big win for investor confidence if it holds. And the consequence of this change in impairment is dramatic. In 2024, they reported a massive operating loss of over $1 billion. But in 2025, thanks to zero impairment, they had an operating profit of $16.1 million. That is a swing of nearly $1.3 billion. The company went from losing a lot of money to making a healthy profit. Let's put that into perspective for some of the business segments. Their specialty products and technologies segment, which includes implants, orthodontics, and aligners, saw sales grow by over 8%, reaching $175.2 billion. And the equipment and consumables segment had sales of $966.7 million, also a good increase. After all the expenses and taxes, they finally reported a net income of $47 million in 2025, a huge improvement from the $111.8 billion loss in 2024. This really shows the financial recovery after the big impairment hit. Now let us talk about cash flow. They provided $275.7 million from operating activities in 2025. This is less than the $336.5 million generated in 2024, which might seem concerning, but the report explains it as timing differences in payments and collections. It is not a sign of business slowing down necessarily, but it is something to watch. Here is a key strategy shift in 2025. They spent $166.6 million buying back their own stock. This is a strong signal to shareholders that management believes the stock is undervalued and they are confident in the company's future. But it is not all sunshine and rainbows. The risk section is quite extensive. They are worried about global economic conditions, trade policies like tariffs and disruptions in their supply chains. which is hardly surprising these days. They also have about $1.5 billion in debt. That is a lot of money to owe, but they are generating enough profit now to manage it, and they had over $1.2 billion in cash at the end of 2025, so they seem to have a good handle on their immediate liquidity. When it comes to competition, they are facing fierce battles across the board, from dental implants to basic dental supplies. Many competitors are trying to cut costs, and that pressure trickles down to Envista. One interesting aspect is their reliance on major customers. Henry Schein Incorporated, for example, made up 12% of their sales in 2025. Losing such a large customer could definitely hurt looking at their overall direction. Envista seems to be on a path of recovery and strategic investment. The significant goodwill impairment in 2024 was a painful lesson, but their ability to bounce back with strong operating profit and reduced SG&A as a percentage of sales in 2025 is commendable. Investing in R&D for new products is smart. Their debt is substantial, but manageable with their current cash reserves and profit generation. A big opportunity lies in their emerging market strategy and their focus on innovation in implants and orthodontics. However, the intense competition and potential for economic downturns are significant risks they must continue to navigate. So that is our deep dive into Envista Holdings Corporation's 2025 report. What are your thoughts on their comeback? Are you optimistic about their future investments? Let us know in the comments. Be sure to like this video if you found it useful, and subscribe for more decoding of corporate filings. We even have a Discord community where we discuss these things further, linked in the description. Thanks for watching, and we will see you in the next video.